Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe. It's the weekend edition for Sunday, the 25th of January. Starting with the FTSE 100, rather, which managed to peak out twice, either above or just at the top of that rising trend channel from February last year. The line there, the black line, 102.30. We're looking for an end-of-day close above that to give us a fresh leg to the upside within that October rising trend channel, and which is has been or was promising a 10,500 target by as soon as the end of next month. Obviously, that now looks a little bit more difficult. While we're below 10,230, got the risk of a move down to the floor of the October channel there. Currently just above the 10,000 level, but 10,025 to be precise. RSI still okay in the low 60s, so we could still absorb the latest consolidation and stay above the 10,000 level on that basis. If there is a rug pull and Trump doesn't chicken out, then the 50-day moving average at 98.50 could be a potential stopping off point, or stopping out point, actually, from some people. Moving on to the DAX, and here we had the two gaps down. We had one gap up, so it's a bear trap island reversal, which in theory is a good look. We also had support on Thursday and Friday at and above the old October resistance. That's now become new support at 24,700, above 24,700 on an end of day close basis. So rather simply looking for a retest of January resistance through 25,500. We've had an RSI rebound. It wasn't quite an RSI 50 rebound, but that is quite a strong signal, as is the way that we bounced above a rising 50-day moving average. So we still have more pluses than minuses for the DAX at the moment. The Dow is next, and obviously this is in the firing line in terms of Trump's various decrees and tantrums, etc., etc. We do potentially have a rising December trend channel shown in lilac there. 48,700 above that, looking for the magic 50,000 zone. Best case would be 52,000 by the end of next month, which would be the top of the channel. But at the moment, that looks a little bit ambitious. Obviously, things could change. If there is a rug pull and Trump actually does something and doesn't reverse it or chicken out of it, then the 50-day line there at 48,100 is the potential destination for the US stock average. Moving on to the cryptos, and here you can see that we've got Bitcoin, which basically we've probably already decided during the week is a 50-day moving average failure. It's a failure below the falling 50-day line. That is at 90,100, and below that looking for at least a test of the October 2024 price channel floor there at 86,000. Worst case is that we've got to test the November floor there towards 80,000 by the end of next month. The other negative, apart from the falling 50-day line, is the way that we've had a clear rounded RSI 50 failure, actually RSI failure well below the neutral 50 level, which, as I said, looks rather ominous, along with the way the 50-day line is also falling. So not much benefit there from the 1 year plus rising trend channel at the moment. In fact, it looks like a bull trap through 95,000. The situation at Ethereum is next, and here you can see that we are struggling at that April uptrend line, which is effectively the floor of a rising trend channel from the early part of last year. You can argue that it's a bit like that. That line there, not really in the game anymore, but we fall through, or we've fallen below the falling 50-day line, falling below that April uptrend line there at 29.80. Below 29.80, the rather simple message is that one would be looking for 26.22, and the November support. RSI has died a death below the RSI 50 level, so that is also a negative at the moment. The only thing left to kick this market in the proverbials would be the 200-day line also falling, which would be a very bad look indeed. Moving on to gold, which has been a shining light, obviously, compared to all the other markets. Didn't quite get up to the 5,000 level, but made a good go of it. Here you can see that that's 48.60-70 area was the top of that rising trend channel from back in November 2024. We were looking for 4,800 by the end of next month. We got it by the end of this month. Above 4,800 now, I think one could say, and that's the old peak there from 47.94 was the old peak from the end of last month. Above that, we're looking for a best case scenario target up to that July resistance line projection as high as 5,400. perhaps by the end of March. You could argue that that's a bit steep, and we have a lower target there, maybe more towards the 5,200 level. But either way, the upside is valid still if we stay above 47.94 on an end of day close basis. If we do break down 46.50, and mid-January resistance is the favored destination. Moving along to the stocks, and starting off with Amigo, and here you can see that the company's refocus away from whatever it was trying to do before and failed into something more commodity driven and rather more exciting. Gold and rare earth mining opportunities is and has been electrifying the share price. You can see that we had our initial target there, which we didn't really want to chart this situation at all, given its history. But 0.86 was the original target. Next target up was up to 1.4 pence, and we are not far from that. We might even get that by the end of next week, or this week at the end of January. After that, I suppose the sky may be the limit. Sky not quite the limit at the moment with alien metals, but it looks rather good, rather better than it has for a long time. The reason we're saying that is the way that we have both 50 and 200-day lines both rising. We've broken recent resistance at 0.14 above that, looking for a minimum at 0.2, and looking for that by at least before the end of next month. You can see double RSI rebound, RSI 50 rebound there, an extended one there in the last week or so, and that it makes this look very strong, especially given the way that we're in the run-up to a golden cross between the 50 and 200-day lines, which could happen as soon as the first week of next month. So above 0.14, looking very shiny there at alien metals. Onto Block Energy, which looks as though it's delivering on at least the technical front. We've got these what looks like a mid-move consolidation there. Mid-move consolidation ahead of a potential move up to the top of that broadening triangle there from back in November 2024. Top of the triangle as high as 1.25 pence, and above the 200-day moving average on an end-of-day close basis at 0.87. We think, or I think at least, 1.25 pence could be on the cards even as soon as the end of next month. On to ECR, which has, after the surprise fundraise that we had at the beginning of the month, regrouped very well. Two gap close buy signals also exceeded our initial target there at 0.32. About 0.32, looking for at least 0.46 by the end of next month or even sooner. Uptrend line in the RSI window, golden cross to start last month, or this month rather. So everything positive there. A little bit higher up the market cap chain, and it's nearly 500 million. We've hit, we're including Funding Circle because the shares have hit that target there, £1.70 right on the nose, which is what we like doing here. Oh, I like doing here. I have to keep on saying that. 190, the next target, which is the upper parallel of that rising trend channel from back in January last year. Looking at that by the end of next month, while we remain above the old resistance here at £1.57. Hopefully we'll stay in the 160s, whatever happens. Moving along to Goldstone Resources, where we knew or believed that the company would need funding. It's got its funding now, hopefully. And initial target there at 0.75 has been delivered, looking for a penny, hopefully in coming days. Best case is that we can get up to the main resistance there from early last year, as high as 1.6 pence, finally, barring any bumps in the road by the end of March. So looking very good indeed. It's a bear trap island reversal, so gapping down at the beginning of the month and gapping up now. That is one of the stronger setups, given that it means or suggests that bears have been wrong-footed and are feeling a bit of pain. On to the situation at Kendrick, and we can see that we are looking at a situation where there's been a rising trend channel base. The market liked what I thought was a very deep, meaningful, and constructive and a philosophical interview between myself and Colin Bird during the week, and it was such a good experience that actually I'm going to upgrade the latest target, which is around 0.46, the upper parallel of that rising trend channel base, as high as the black line there that I'm just drawing at the moment, and that is 0.67, looking for that maybe by the end of February, going into March, certainly by the end of the first quarter, and looking for that the longer we stay above the September resistance there at 0.42, so that makes it look very nice indeed. A company that nobody seems to look at or talk about is MyCells, but it's always here because I like the chart. Here you can see that we've hit our first target there, 33 pence, looking for the second target at 50 pence by the end of next month. We're really lucky, and deserves to be the case, by the end of this month. So looking good there, as I said, well, especially while we're on the right side of the old January resistance there at 38 pence. Moving along to the situation at NEO, which well, I've actually called up another one right there. We're looking for the shares to hit a penny while they were above the 50-day line at 0.76. They've already done that. They've hit that initial target there around 105, above 105, looking for a new leg up to as high as 1.36 by the end of next month, or even sooner than that. Ideally, we stay on the right side of that old peak there, around 0.93. In the meantime, of course, this is all given or subject to no surprise fundraisers, announcements, or other dog ate my homework type of situations, which I don't think will happen anymore. Covering Orosur Mining today, just because the CEO said hello to me during the week, which I felt rather honoured, because he hasn't talked to me very much since he hit the big time. The charting signal or charting setup here still up to looking for 43 or 45 pence by the end of next month. That looks as though actually it could be exceeded, and it looks like we're in a rather wider trend channel, more accurately up towards the 50 pence zone, but won't get too excited yet. Above recent support on the floor of this latest bull flag, looking for 34 pence. 34 pence, looking for 40 pence plus well before the end of next month. Next on the list is the situation at Pulsar, and here you can see that we've fallen back from the best levels, but we have a situation where the old target there at 75 pence should come in as support, and we're still looking for up to £1.15 by the end of next month. This looks like the new Guardian metal, and it's worth mentioning the Guardian metal because I forgot to look at it. We're so excited about Goldstone. Here you can see that we've got this rising trend channel, top of the channel there, heading for £2. We're looking for that by the end of next month, while the shares remain above recent resistance of £1.60. This has been called higher ever since 8 or 9 pence in the good old days, and so some kind of medal for that, but I haven't got one yet. But £2 on the cards, hopefully. RSI 50 plus rebounds. In fact, there are RSI 60 plus rebounds, so looking very, very strong indeed. And I believe that there's been director buying even at the higher levels. So presumably, some of the directors believe that a 288 million market cap is not very much, and it should be rather nearer to the 500 million level, which is something I probably agree with myself. Onto strategic minerals, which did fantastically well during the week, because I think the shares rose even though there was a fundraise. We were already expecting a resumption of the rally within that rising trend channel from October at 1.5 pence above that. Looking for up to 2.4 pence by the end of next month. Very excited about that, actually. That looks right. Looks like it could be the next train to leave the station. Train that's already leaving the station is Tungsten West, and here you can see a bit of a vertical move as tungsten becomes the new gold. Looking for 20 pence by the end of, well, probably the end of this week, hopefully, while we're above the old peak there at 16. If you're a fan of the shares and looking for greater glory, then I will draw the upper parallel of that rising trend channel, which is probably heading towards that level there, which is around 31 pence, and looking for that by the end of next month. As I said, while we're above the old resistance around 16 pence. Finishing off with the stock which I was penciled in as being one of the potential stocks of the year. It hasn't done so well in the last week or so, but we have had a rebound off a rising 200-day line there at 0.23. And above that, rather simply, if I can get rid of some of the rather distracting lines here, looking for the shares to hit the top of the range again at 0.3 pence plus. So I suppose the new trajectory here would be a rising trend channel here, like that from back in September. But hopefully this is the floor for the shares. And while we're above that 200-day line, looking for a 0.32 plus by the end of next month. That's it for me today. More updates tomorrow.